Well, from one corporate to another then, and let's keep it going with Sunil Bohra. He's the CFO at Minda Industries, joining in to talk about their multifold increase in their profits as well as the higher sales which have been witnessed in the quarter gone by. Mr. Bohra, good to have you on board. It's been strong growth that you've seen across your segments. Tell us how you're looking at the overall demand scenario playing out currently.
Yeah, good morning, everyone. So as we know that currently we are all impacted by the pandemic, and we have seen the last cycle when we had the wave one post the unlock phase, we have seen a significant growth in our numbers. And in fact, we all know that the October numbers were the peak for some of the OEMs. So in last 1 year, if you exclude the first quarter, I think 9 months have been really good. I don't think we have any reason to complain. There has been very good demand. And there was a demand which was led by the personal mobility driven factor. And we do expect that part of the demand to accentuate even further. So once we start this unlock phase, which has already been resumed, we are seeing a gradual sort of a ramp up in our volumes. But as we all know, it's a little tricky to comment about how does things pan out. If there is no third wave, definitely we are looking for a very, very good next 10, 12 months. But it all hinges on whether we have third wave or not. But whatever it be, I think the need for the personal mobility will stay. And also we all know that the auto sector per se for last 2 to 3 years from the fag end of 2018 has been witnessing challenges in terms of lower volumes, be it the BS6 transition or be it the buzz about EV, be it the rising cost of the vehicles. So overall, we are pretty optimistic, and the way the country is going about in terms of vaccination, the lower numbers we are seeing, we're pretty hopeful that the country might see a gradual unlock, and we are hopeful that the demand should sustain from Q2 onwards.
To hear that. Sunil, so your margins have improved to about 13.5% now. What numbers are you looking for or working with for the full year in terms of margins, and how much growth should one expect in your top line number as well, if you could just give us a broad sense at least?
Yeah. So if you see the kind of numbers we have sort of announced, they are definitely beating the market. If you see first starting with the top line, the industry growth in terms of vehicle numbers has been around 31%, whereas our growth has been 49%. And to take a note of it here is that we have acquired Harita. The transaction has just closed on 1st of April 21. But since the merger was effective 1st April 19, we had to restate our past financials. So we are comparing apple to apples only. So while the market has grown 31%, we have grown 49% on overall basis. And one significant point to note is that our aftermarket channel, which is primarily a B2C sale or a replacement market, there our volumes or the revenues have grown more than 70%. So we are seeing a significant growth and result of our efforts to sort of increase our B2C sales also, which is an aftermarket. So we do expect this momentum to continue. Now moving to the next year, when you are talking of the growth, we are currently in process of commissioning our two-wheeler alloy wheel plant, which will give a peak sales revenue of almost like 400 to 500 crores. We are currently in process of ramping up our sensor business. We are in process of setting up 3 new plants. I'm not sure, just for benefit of the viewers. A couple of months back, we have actually announced 2 new plants, and prior to that, 1 new plant in Bangalore. So 1 plant in Bangalore for blow molding, 1 plant in Gujarat for lighting, and another expansion in Bawal for four-wheel alloy wheel manufacturing. All this put together, we are investing almost like 350 crores. So this again, once sort of fully constructed and starts ramping up, this will again give a good growth. But if I have to put a number, so if you remember that our dependence is primarily on OEMs. So while we don't give any specific growth guidance, but our endeavor always has been to outperform whatever industry growth is. And that's what you see that last quarter I just said that industry has grown in terms of vehicle volumes is 31%. We have grown by 49%. And that's a trend if you see in past few years. And that is a trajectory we are currently working on. We are also working on newer EV components, a lot of them. So while we all know that today the EV share in the market is pretty small, but once it grows, we are there. And we are pretty confident that we should be able to capture a good volume for the EV dedicated components, while most of our components are agnostic to the fuel it runs. So be it lighting, be it wheels, be it switches, be it whatever, other than a couple of products like filters, our products go in non-EV also and EV also. So from a medium to long-term perspective, we are pretty confident that we should be able to outperform the industry growth in terms of revenues.
Right. Okay. Understood that. Also, Sunil, wanted to understand the fact that you've, raised about 7,000 crore rupees, or the board has at least approved the fundraising of a sizable quantum like this. How is it that you plan to utilize the funds?
So let me correct here. It is actually 700 crores. So normally what we do is we have our annual approval from the shareholders there. So in case the business needs, in case there is any opportunity, we can capitalize on that opportunity. So as of now, what we speak, like last year also, we took approval from shareholders for 700 crores, which is expiring on 20th of June. So we always try and have an in-principle approval from shareholders in place so that in case the business needs, we don't fall short of approvals. And that is primarily for enabling approval. As of today, there is no plan for any specific fundraising.
Okay, now when HFR becomes your wholly owned subsidiary, how do you see that contributing to FY22 numbers, and how much was the contribution in Q4?
Right. So HFRL, we all know, has been a joint venture with our partner Ferrer from Europe, and they have shown their intention to sort of encash their share. So the board has approved to acquire at 115 crores. If you see the valuation part from FY20 profitability, while their top line is almost like 400 odd crores, if you see on the PAT valuation, it's a very good valuation, attractive valuation of 10 multiple. So it will be a value accretive for the Minda shareholders. And once this transaction gets closed, it will be 100% subsidiary of MIL. Even today, it is 51% subsidiary. So from that perspective, management already has a full control. So operating-wise, we already have a lot of flexibility. And maybe in future, like we have done in past, we have merged 4 subsidiaries. In future, maybe there may be an opportunity when there are maybe 1 or 2 more. We will reevaluate if we should be merging Haritha Ferrer as well. But as of now, there are no plans, and it will remain 100% subsidiary of Minda Industries.
Okay. You've also, consistently been launching new products, acquiring new customers. What is FY22 expected to be like in terms of plans, outlook, anything that you'd like to share with us?
So we are pretty confident, as I said, in terms of the next 9 months. We all know that Q1 has been significantly impacted because of the COVID-related lockdowns, restrictions, etc. Even the end consumer has not been able to go out. So we are pretty optimistic that considering that few of the products which we are currently in the process of putting together, we just spoke about alloy wheel, etc., that we do expect it to ramp up. We are currently working on a lot of EV components, some of which are already under production, some of which are already under development, and some of which under our incubation. So as I said, that EV aspect, once it grows, it also will provide a significant bump up. And in terms of the absolute growth, we are seeing a lot of growth in premiumization-led demand, be it the LED lighting or be it the alloy wheels or be it the electromechanical to electronic horns, etc. So there is a premiumization-led demand. Also, as I spoke a while back in terms of aftermarket channel, we have been consistently growing our aftermarket channel significantly. While we have grown around 70% last year with a low base of around 135 crores to 225 crore. If you see on an annualized basis, we are already at a 900 to 1,000 crore of aftermarket sales, which is very, very sizable considering the segment we operate in. Now, what we are also doing is we are also adding newer products to that, like once we have now acquired Haritha Seating. So we will be adding seating also as part of our aftermarket channel. We all know that we have got a network of almost 700 to 800 dealers across the country. And we would like to capitalize on that network by launching the seating also as part of it. Last year, we launched alloy wheels and air brakes for CVs. So we are consistently working on introducing not only the products on the OEM side, which increases the overall kit value, we are also trying to see how we increase our offers or our products in the aftermarket channel, because there we all know that the profitability of the margins may be marginally better than what you have in our base model, and also that may not be as directly correlated to the industry new growth. So where aftermarket, we all know the potential in the country, and we're pretty confident that that will also be, we will be able to outperform in that segment as well.
And with commodity price inflation, did you revise prices upwards, and what's the plan to deal with or mitigate the pressures of the same?
So definitely there is an impact in terms of margins in last quarter also. So the margins have been impacted because of increased commodity prices. But the way our contracts are structured with our customers, mostly we have a price reset clause. Somewhere it is annual, somewhere it is quarterly, somewhere it is half-yearly. Fortunately, we are at the beginning of the year, so we have an opportunity to align the commodity price increases together with our customers and create a win-win. While 100% may not be able to pass through, but we'll work on see how maximum we can pass through. Plus, also what happens is when we discuss about price increases and we reset the clock, we calculate normally the past period average or the quarter average, and the spot may be higher. So to that extent, we might have a little bit impact in the coming quarter, but broadly we are able to discuss with our customers and create a win-win and able to pass through most of the commodity-led price increases.
Appreciate your time. Thanks much for sharing with us the outlook on the company, your financials, as well as capacity and the impact of raw materials. That's Sunil Bohra of Minda Industries.